Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, Mineral Mountain Resources has done well since they presented at the Metal Investors Forum in mid-November in Vancouver. What's driving market interest?
Mineral Mountain on October 24th had announced a $3 million private placement, 15 million units at 20 cents with a full warrant at 35 cents, good for 2 years, but there is an acceleration clause if the stock trades above 50 cents for 20 days. The stock was like barely above 20 cents at the time. The company seemed to be struggling, had gotten up to 25 cents around by the time of the Metals Investor Forum. And I believe what happened was the Metals Investor Forum was their first opportunity to showcase some additional stuff they have found out about the Rochford project in South Dakota's Black Hills. During that presentation by Brad Baker, I saw for the first time this hole that Getty Oil had drilled in 1982 into the standby mine zone. And the standby mine, it was mined down to about the 425-foot level, and this hole by Getty Oil intersected the zone at about 600-foot depth, and it got 37.5 meters of what looks like very juicy iron formation, mineralization with arsenopyrite, and there was visible gold in about 4 sections of it. There were, however, no assays, and the hole was never followed up by Getty Oil. And the Mineral Mountain team tracked down the original core. There's only a quarter core left, so it can't be reassayed. And they wonder why. Well, why was this never followed up? This is like a really good intersection. And most likely the reason was during the 70s, all these oil producers decided that they needed to get away from their core competency and get into the mineral exploration field. And then after oil prices collapsed in 1983, they all retreated, gave up, and got back to their what they were supposed to be doing. Now, Homestake came in there and drilled a couple holes farther down plunge on this standby zone and nipped a couple of interesting intersections showing that this iron formation zone is mineralized with gold over a considerable distance, but never really followed up trying to stitch it all together. Since then, Mineral Mountain has assembled all those claims. It has done a digital compilation of all the information, plus added new geophysical data to it to better understand what's going on. And what they are planning to do is, as soon as they close this financing, which they have scheduled for December 7th, so next week, they will start drilling. All the permits are in place, and the first hole will be designed to twin this 1982 Getty hole so that they can confirm its location and establish grade. And this hole will be pushed to about 300 meters to intersect a couple more of these canoe-shaped structures that are the target for the gold mineralization in this Homestake-style system. So I think it's the market's realization that this program is not going to be just blind stabbing in the dark, but is very likely going to deliver a good intersection quite early in the program, which then becomes the basis for more step-out holes. And the company plans to drill about 8 holes, tracking the zone down plunge about 400 meters. The entire zone has been modeled to have based on the magnetic anomaly, to have a down plunge extent of about 1,000 meters. So there's an awful lot of room. Now the goal is to find something like the Homestake deposit, from which 40 million ounces were mined from a series of so-called ledges. And these ledges are portions of the folded iron formation, the keels of them, where shear zones have ripped through, made it very brittle. And we know that both the Rochford camp and the Homestake camp was subject to hydrothermal fluid flow, gold enriched, and these shear sheared parts of these iron formation keels is where the gold soaks up. So the company's hope is that whereas at the standby mine and the Cochrane, the near-surface zones were relatively small, when you follow them down dip, you will find portions where the shears lined up better with the direction of the keels, so that more of these keels, when they were hit with the fluid flow, soaked up the gold. So this is the beginning of a major program whose goal is to demonstrate that at Rochefort there are not just tiny, tiny little babies of homestake, but there are sons of homestake-style ledges present within the Rochefort district, and this has sort of caught the market's attention. The market wants big discovery plays, so the interest post-Metals Investor Forum is a combination of investors realizing that this is not going to be a blind shot into the dark, hoping to get lucky. It's very likely going to start out with good results. The good results will be the basis for vectoring in on where this zone is plunging, start stepping down and start building a deposit, a mineralized system where you can start seeing tonnage evolve as the drill results come out.
We'll have more with John Kaiser right after the break.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the U.S. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the U.S. and GET in Canada. Find out more at glancepay.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, Peregrine Diamonds announced micro diamond results for this summer's drill program on the CH6 pipe at Chitiliac. The market yawned. Did we learn anything new from the news?
The results that Peregrine Diamonds reported for the CH6 pipe were actually really, really good news. They have, in effect, doubled the depth of the pipe from 260 meters to 540 meters. Now obviously, these pipes will go down, who knows, 1,000 meters before they peter out. But what the micro diamonds demonstrated was that the so-called normal grade zone, which runs about 200 carats per 100 tons, and the high grade zone of 400 carats per 100 tons, they both persist all the way down to that 540 meter depth. So this data will allow the company to add into the resource category basically a doubling of the size of the CH6 pipe. The CH6 pipe was the foundation of a PEA published last year, which along with CH7 had a mine life of about 10 years or so, which really isn't enough to justify building a major diamond mining operation in a remote place such as Baffin Island. So this will allow them to go and revise the PEA, incorporate an underground mining scenario which will extend the life of the mine and the economics of this project. And they hope to be able to put that out in 2018, or in the first quarter of 2018. They also reported that as part of this program, they recovered 4 fragments of a green diamond. And when they reconstructed it, it looks like the diamond was a couple millimeters across. So this is a macro diamond. Now, the company in the past has tried to get mileage out of what they called yellow diamonds, and which to me looked like urine-colored diamonds. There's this obsession to talk about fancy diamonds being present in a pipe. But those yellow diamonds that they had, they never really struck me as being the true fancy type of diamonds. The Chidliak pipes are unusual in that they have very good quality, colorless diamonds, and that, in my view, is ultimately what consumers want. However, green diamonds are extremely rare. So this could be an interesting twist to the CH6 pipe, that when you get into a bigger mining, you may come up with very unusual green-colored diamonds. Now, the market yawned because every time there's been good news with the Chidliak project in the past 4 years, shareholders have been punished by a rights offering at a lower price. It's as if the better the project gets, the lower the stock price gets, and the more dilution suffered by existing shareholders. But I think this time around, we may finally be at a turning point. The presentation that the company published does not really spell out what they are going to do next, but in the press release, they talk about building a 10-ton per hour dense media separation plant on site. In the past, they have had this problem that they extract these bulk samples in the winter when they're allowed to, move around with their tractors and so on and not mess up the tundra. And then they have to wait for the ice to clear, which is July, to barge the samples out to the mainland, Ontario or Saskatchewan, to have the samples processed for macro diamonds and get grade and value. And that has added very lengthy delays. Building a dense media separation plant on site will allow them to process bulk samples, even mini bulk samples, year-round. And I think this is a signal that the Friedlands are finally going to roll up their sleeves and get serious with advancing Chidliak. CH7 needs some more bulk sampling, and CH1 and CH44 are additional pipes whose grade potential needs to be confirmed for the CH44 and figured out for CH1. There are additional pipes in that cluster that ultimately need to be assessed. So the knock against this particular project, namely that it's tonnage challenged, and even though it's high grade with good quality diamonds, it's total carat challenged. I think the Friedlands are finally taking the step needed to make this a bigger project and overcome the reluctance of Bay Street to finance this company, so that it isn't just the Friedlands reaching into their own pockets to exercise their share of the rights offering and letting everybody else dig up more money and not really marketing the company. Now, the market, understandably, is suspicious because we've had several rights offering at cheaper prices, and there's now a so-called Friedland factor assigned to the company. Now, it's not a Robert Friedland factor. It's because his Cleantech and his Ivanhoe have done really well. What the market's concerned about is that Peregrine Diamonds was always Eric Friedland's baby. And several years ago, he kind of disappeared into a cave. Like he no longer wanted to have contact with anybody. He left Tom Peregodoff in charge of dealing with everybody. He essentially disappeared. And it created this sense that he was ashamed of this company, of this story, and this has washed into the market, and people do not want to respond to good news. The day Eric Friedland picks up the phone again and declares, "I'm back and I'm pumped about Chidliak," is the day that I get excited about a project which, in my view, is the best advanced diamond project out there right now.
Coming up, we'll have John Kaiser's closing comments.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. please visit our website at arcticstar.ca or call us at 604-689-1799. I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're talking with John Kaiser. John, on Monday, Novo Resources and all the Pilbara juniors had a very bad day, even though the market had most of Friday to react to Novo's update. What was going on?
It was really strange what happened over the weekend. It seems like the stress of shareholders went through the roof. When we talked about it last week, I outlined the four basic disappointments, which were one, the 17.5-inch large diameter drilling wasn't going to be effective to give us reliable grades. The fine gold component wasn't going to be useful because it was restricted to a couple millimeters surrounding the nugget, so it was the same thing as the nugget effect, and that we weren't going to get the trenched mini bulk samples until January because the Nagram facility had delays getting itself optimized and ready. So all the hopes that we would get some sort of grade confirmation in December vanished, which was simply really a delay. There was nothing fundamentally negative about the potential of the play. That the stock retreated was understandable, but that it went and took this big dump on Monday amid all this gnashing of teeth and wailing, that was really strange. And I think the reason is that there are two shareholder classes in Novo. The first class are those who were focused on Beaton's Creek for the last 6 years. I mean, Beaton's Creek is essentially a dud. It's a lowish grade, smallish deposit that the company decided it would try to put into production, generate cash flow, and use the cash flow to continue search around in the Mulligeen area to see if they could find more of this conglomerate hosted gold. And the stock was 60, 70 cents, and that's about all that it would ever be worth based on the Beaton's Creek scenario. And then in July, when the first video was published showing this nugget gold 350 kilometers to the northwest in a completely different area, where suddenly Novo owned 10,000 square kilometers, that changed everything. And within a sort of 3-4 month period, these shareholders from the past 6 years suddenly had 10 to 15 times gains in the value of their portfolio. So compared to those who bought in at $2 to $9 or so, those people, the newcomers would have had a rational portion of their wealth tied up in what is basically still a very risky story. But these others had extraordinary windfall gains, probably a big chunk of their net worth following these substantial gains. And when the stock started to retreat, these shareholders experienced a very different type of stress than the more recent speculators who are hoping this thing turns into another 10-bagger from these levels, but have an appropriate exposure. And that anguish that we saw in the market out there, that was as a result of a fairly substantial market cap haircut being experienced by those players who were on board before. The other thing that was strange is that people seemed very worked up about the statement that the gold seems to be concentrated in the basal part of the conglomerate. And for some reason, that was perceived as a negative. And we'd heard that the bed is 4 meters to 15, maybe 20 meters thick, and that the nuggets are all over the place. But we'd already also heard from Novo that as you get to the top of the bed and quartz cobbles start showing up, the abundance of nuggets decreases significantly. But they had published, some cross sections showing that nuggets do occur at a variety of levels, and that's why the market was a bit shocked when they said most of them are near the base. And they'd seen the Karatha live show for the Denver Gold Forum, where you can clearly see there's like 10 meters of width of pink circles with the Australian cowboys dancing around with their metal detectors and then jackhammering away. And you say, well, how can it just be at the base? And the problem really is a lack of understanding that these very shallow dipping beds, that when you cut a plane across the top, a 4-meter bed, thick bed, will be 45 meters across, appear to be at surface if it's dipping 5 degrees. So that 10 meters that we're seeing really reflects about a half meter of thickness. So I suspect that the company was trying to get people to calm down and stop thinking we're dealing with 4 to 15 meter thicknesses. And it also makes the bulk sampling much easier, because if you know that the enriched bed sits unconformably on the basement, which is quite recognizable, you do your scout drilling to find out how deep the basement is and where that target bed is. And if it's like even if it's only a half meter thick, you focus your bulk sampling just on that area. You don't have to worry about figuring out the nuggets spread over a 5 to 15 meter thick bed. Now, the sample that we got, the 542 kilo sample, that ran 2 ounces per ton, that, even if it was like a meter thick, that was probably representing only about 10, 15 centimeters of true thickness of the bed. And if the gold is indeed running 2 ounces over, say, something like a half meter, we're not going to do tonnage calculations of 2 ounce per ton over 40 million tons or whatever. We're going to have to dilute this to a mining width to, a couple meters, so it would end up being half ounce per ton, which is still very impressive. That's still $700, $600, $700 rock, and very, very good for underground mining. So what we hope to see in January is a series of samples done on a grid along the base of this bed, showing us how does the grade behave over, say, several dozen such pits. And right now we don't know what it will be. If it ends up just being 5 grams per ton in each, and we have to increase or divide that by 4 to get a mining width, well, that will be disappointing news. On the other hand, if we start getting these types of 1 to 2 ounce grades from the pits that represent the lower meter of this bed, that will actually be a very big plus for the market, and that will re-jump this story in the new year. In mid-December, Novo is going to give us a detailed portrait of what, based on all the scout drilling that they've done, what does this system look like? And I think this will give a lot of clarity as to what kind of animal we are dealing with, what sort of local complications there will be in terms of does the bed pop up here and drop down over there. And then, of course, we will still have to wait until January to see how the grade behaves at the edge of this bed where it daylights. And an important point I would like to make is that if you reject the idea that these nuggets came from some pinpoint source in the hills that got eroded away, and instead argue that these nuggets formed through some sort of submarine precipitation process and then was perhaps reworked locally by rivers flowing in and creating a more placer-like looking deposit. The Purdy's Reward project is a random fragment of something that took place over a very large area. And there's no reason to believe that what we have here at Purdy's Reward is a little piece of rope that sits there by itself. we have the edge, the tail of an elephant, and many other companies will have something similar. But the challenge out there now is how do we properly assess it? My own hope is that companies follow Novo's lead, and where they can see that they have Mount Roe basalt and a conglomerate bed and nearby nuggets popping up in the dirt that seem to be spilling out from this, go in there and start drilling scout holes into it, delineate the beds, get an understanding of it, and be prepared to move quickly when and if Novo demonstrates that the grades here are definitely at a level better than at Beaton's Creek. You will need to do some sort of bulk sampling, and when you spend expensive money, spend a lot of money on expensive bulk sampling, you will want to know exactly which part of the bed you target for extracting a bulk sample to measure grade.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.